Hello and welcome to Week in Markets. I've got the pleasure of being joined by Faye Graham, investment analyst, who's going to walk us through the key events of this week. Faye, it's been quite a volatile week in terms of equity markets, and we've seen some of that volatility from a multi-asset perspective being dampened by the positive returns that we've seen within global sovereign bonds. But perhaps you can just walk us through what have been the key drivers of equity market volatility this week.
Yeah, as you say, quite a volatile week really. The weakness has really been led by the US. So we've had a few data points, a few bits in the news as well, which have really driven that. So I'll maybe start with the US consumer confidence that we had on Tuesday. So within that, we saw the largest monthly decline in consumer confidence since August 2021. And it was quite a bit lower than markets had anticipated as well. So that drove quite a bit of weakness in US equities.
I suppose just on that, on consumer confidence, it is a survey data.
Yeah.
So you often get quite a bit of volatility month on month in terms of what the signal or reading it gives you. It can be quite negative, it can be quite positive and really depart from what the consensus is. So yes, it was negative, but perhaps not to anchor too much on just one component, but it certainly was part of this narrative that we've seen this week of just slightly softer growth data.
Yeah, definitely. I think another aspect that we saw as well was the jobless claims that came out. I think it was yesterday. There was quite a tick up in those as well. So the number of people filing for employment benefits in the US. I think another aspect that we've got as well is the US federal job cuts as well that have been coming through, and then the knock-on impact that could have on consumption. So I think it's, there's a few data points coming together that's sort of, you could quite easily paint a picture of softening growth, but we will get some more data next week as well on the labour market through the non-farm payrolls, which is quite an important gauge. So that'll be an important one to look for.
Exactly, and you're right to bring out the labour market data, because if you think about the Federal Reserve, who's in charge of controlling interest rates, one part of the mandate is inflation, the second is employment. And so far, the employment figures have been very steady and supportive of the overall economy. We saw, as you pointed out, initial jobless claims take a little bit higher, but it wasn't alarming at all. So certainly one to watch out for next week. And I suppose other components really driving markets, it's difficult to go a day without talking about Donald Trump and tariffs. Had developments yesterday. Do you want to just discuss what those were?
Yeah, exactly. So we've had, obviously, Trump talking about 25% tariffs on Europe now. We've got the additional 10% tariffs on China as well. And that really weighed on Chinese and Japanese equities. So you've seen a bit of volatility overseas within Japan and China as well from that.
Exactly. And expectations are that on next Tuesday, there'll be tariffs being put on or coming into force for the likes of Mexico and Canada. But we'll wait to see. Trump has often come and threatened tariffs, but we have yet to see too much being really imposed. So we'll see next week.
Yeah.
And I suppose, thinking about US equities, last year exceptionally strong, got off to a good start, but over the last week we have seen some weakness, and it's really come through in those that have performed the best over the last 6 to 12 months, thinking about US technology stocks, financial stocks. I suppose why we're seeing weakness coming through in the tech side?
Yeah, so one of the key drivers was actually Nvidia. Yeah. So one of the stocks that have performed exceptionally last year, as you mentioned, I think up about 180% just last year. So it's trading at quite high valuations. and investors are just getting a bit nervous about whether they can continue to deliver on those extremely high earnings expectations that are baked into the price. I think particularly with some of the new developments that we've got overseas with sort of more efficient, cheaper models like DeepSeek coming through, investors were definitely looking at the results this time. So they're actually quite strong. So they delivered, I think, 78% year-on-year increase in sales. The guidance for the current quarter was quite strong. The CEO was quite upbeat and optimistic as well. But even despite those strong results, you've still had, I think it was about an 8.5% drop in the stock price yesterday. So it just shows how much the market is sort of expecting for the stock. And
you're right to think about the results were exceptionally good. Guidance was good for the quarter, for this quarter as well. Positive developments in terms of the production of its new Blackwell chip, but it is just a subtle nervousness that's coming through within markets over the last month, really, because of the developments of cheaper alternatives, technology coming from China with the likes of DeepSeek, but also concerns that perhaps some of the technology companies may rein in their capital expenditure, and therefore just the sentiment around these stocks is quite fragile right now. And we saw that certainly yesterday with Nvidia, and that's dragged down on US equities. I suppose before we turn to the inflation data that's just come out today in the US, we are global investors. We're multi-asset investors. So whilst we've seen weakness, as you mentioned, in the US, Japan and China just this week, it's quite interesting to just see how the UK has been performing.
Yeah, so actually the UK has been positive this week. You've seen, I think, Trump suggesting that the US and UK could potentially reach a deal without tariffs, so that's been quite positive for US stocks. I think elsewhere we've seen the value style equities also perform quite strong, and also bonds as well. So we've seen bond yields come down, which has been positive for the return as well. So I think that demonstrates the importance of being diversified. Obviously, as multi-asset investors, we've been able to participate in part of that strong performance.
And also why we try and anchor on valuations.
Yeah.
When companies like the UK, which UK equity market has struggled for a long period of time, but it is very cheap on a relative basis, and that really does help when you see a bit of weakness coming from those more expensive areas.
Yeah.
Okay, so if we just finish off thinking about US inflation, I suppose, in summary, a good report in terms of better than expected, in line with what we'd expect.
Yeah, completely in line with expectations. So you had core PCE, which is the Fed's preferred inflation measure, that came in at 2.6% on an annualised basis. So I think actually the lowest reading since 2021. Still obviously above the Fed's inflation target of 2%, but encouraging that it's in line with expectations and heading in the right direction.
And I think just looking at markets before we came in, futures markets in the US were slightly higher and bond yields were broadly unchanged following the report. Excellent. Well, thank you, Faye, and thank you all for watching. Have a great weekend, and we'll see you next week.
This video is not a recommendation or personal financial advice. With investing, your capital is at risk. Investments can fluctuate in value, and you may get back less than you invest.